revised framework stipulates the risk provisioning under the contingent risk buffer to be maintained within a range of 6 plus or minus 1.5% of the balance sheet size. Now, this is compared to the existing level of 6.5% with a lower bound of 5.5%. And this is also one of the reasons that we are possibly seeing the surplus to be at the lower end of what was being expected. Now, this is likely to have some fiscal implications as well as some liquidity implications. We'll quickly go across to Gaura Sengupta, Chief Economist, IDFC First Bank, and Anubhuti Sahai, Head, South Asia Economics Research at Standard Chartered Bank, who are joining us to share some of their insights on what this surplus transfer means for the government. Hi Gaura, I'll come to you first. What are you making of these figures and what were your estimates?
So it is in line with our estimate. Our estimate was ranging from 2.6 to 3 trillion rupees, but the dividend, as you mentioned, has come lower than the market estimate. But that's mainly because of the provisioning. So under the economic capital framework, they have increased the contingency risk buffer. It's now higher by 1% to 7.5% of the total balance sheet size. So this is, if let's say they had not changed the contingency risk buffer and they had maintained at 6.5, the dividend actually would have been at around 3.5 trillion. So that the fact that it's come a bit lower than market estimate is because they have increased provisioning. The other key change that I see is that they are including provisioning of off-balance sheet items, which I assume they are referring to the forward book. In the document, they have mentioned that the off-balance sheet items have risen significantly, accounting to almost 10% of the RBI balance sheet. So they are likely referring to the forward book because RBI's forward book has become net dollar short 84 billion, which is a large increase. So they have also added a little bit of element of provisioning for the off-balance sheet items also. But if, let's say, they had not changed the dividend, the provisioning, the dividend actually would have been higher at around 3.5.
Okay, all right. Coming to you, Anubhuti. So, is it, while we will find more details once the RBI annual report is out, would it be fair to say that this figure is largely on the back of the higher FX transactions that we've seen through the course of the year as the RBI attempted to sort of, flatten out the volatility we saw from the rupee?
Yeah, absolutely. Pallavi, this dividend, while it's lower than expectation, it's still a very hefty number and one of the record highs which we have seen in terms of transfer from the RBI to the government. And as you very rightly pointed out, it is primarily driven because of massive dollar sales which the RBI pursued in fiscal year 25. If you look at the RBI's income generation and the composition of income generated in the previous years, that is still FY24, 20 to 40% of income generated was from dollar sales. But in FY25, as they sold a record amount of dollars, which is $400 billion, we estimate that almost 50% of the income came from dollar sales vis-a-vis a much lower range, which was the case till fiscal year 24. On top of it, I think the interest income also remained pretty robust. So domestic assets and foreign securities assets yield them decent interest income, and they were either flat or marginally lower. So that also would have provided support. But the big support came primarily from massive dollar sales, which RBI did in fiscal year 25.
All right. Coming back to you, Gaura, I do want to understand what the fiscal implications of this figure might be. Do you expect any change to possibly the government bringing down its fiscal deficit number? Or do you think that, while this figure does provide some support, it might largely be redirected to other avenues?
So the budget is actually building in, I think, around a 2.2, 2.3 trillion RBI dividend. So this dividend is higher than that. It creates a fiscal space of around 0.1% of GDP. We don't expect it to materially change the fiscal deficit, because you have to understand that the fiscal is also facing risks from, let's say, the income tax collection target, which is a bit ambitious given the fact that there has been a substantial income tax cut. There's also a potential shortfall that can happen from disinvestment proceeds, which have been usually trailing the budget estimate for the last couple of years. So when you take these into account, you include the fiscal space that the RBI dividend has created, plus the government of India had also increased the excise duty on petrol and diesel. That also helped them create a slightly more, another 0.1% of GDP of fiscal space. We still see that the government of India is on track to meet the 4.4 fiscal deficit target.
Okay, I'll come back to you, Anubhuti, on this. Pretty much the same question. Can we expect anything in terms of the fiscal deficit impact, or do you also believe otherwise?
I think it's still very early to go ahead and say that fiscal deficit will be narrower than budgeted. I think there are reasons where we can see some shortfall either in revenues or maybe higher spend in case if growth dips. But I think fiscal deficit either will be at 4.4%, which is as per budget, or narrower for two counts. One, this RBI dividend, even though it's lower than market expectation, it will still yield the government close to 0.15% of GDP worth of additional revenues. Second bounty is likely to come because crude oil prices are significantly lower. They have increased excise duty, but it's still, it won't yield a very large revenue upside, but probably the upside revenues can flow in via the dividend channel, via the corporate tax collection, especially from the oil companies. So our sense is 4.4 is likely to be delivered, and if things go in line, if revenues are okay, and if they don't spend a lot more, then we might actually see a better number. But as of now, it's very early to pencil those in. 4.4 is definitely coming through by end of March 26.
Okay, Gaura, I do want to ask you how you are viewing the tweak we've seen in the contingent risk buffer as well. It has been raised, and the central board has sort of stuck to the higher end of that new range they've recommended. Given the uncertainty we have seen unfold over the course of the past few months, how are you sort of viewing that tweak in the economic capital framework?
I think it's a very, very good move. It shows a lot of foresight on the RBI side, because they are trying to do two things. One is they're trying to smoothen the dividend transfer. So now the dividend has become a large source of wall in fiscal calculation. So even last year, we got a very large dividend of 2.1. The year before that, it was significantly lower. Now we've got another high year of 2.7. So they want to smoothen out the transfer from the RBI to the government of India. So the volatility on the fiscal account is less. So let's say as we are in a high, this particular FY25, RBI has generated a very large dividend. So they maxed out their contingency risk buffer at 7.5. During years when they let's say the revenue generation from the RBI is lower, they have the flexibility to reduce their contingency risk buffer to 4.5. So they have widened the contingency risk buffer. It's not just higher, but it's actually wider. They are first trying to make sure that over the years the dividend payment is smoother to the government of India. The second thing to keep in mind is RBI is facing a very volatile global situation, especially on the FX reserve front. For example, 85% of our FX foreign currency assets, excluding gold, that those are held in foreign securities, and we assume majority of that would be in US treasuries. Now, US yields are facing upward pressure because of the markets are questioning the sustainability of the US fiscal deficit debt trajectory. And that question is not going to get resolved anytime soon. So upward pressure on the US yields will persist, and that could pose revaluation loss on FX reserves. So again, from both these perspectives, smoothening the payment as well as dealing with a more volatile global environment. It's a very good.
Okay, all right. And I know this is an extremely preemptive question, but what does that then say about the RBI surplus transfers going forward? We have typically seen the central board, stick to the higher end of the contingency risk buffer range. So maybe next year, while we may or may not sort of continue to see a fresh record high in terms of the transfer. Any expectations, anything that we can sort of preemptively get in terms of information from these tweaks? Anubhuti?
Very early, Priyanka, like we are just 2 months in the new financial year, and we'll have to see a lot of things on dollar sales, the quantum of dollar sales, the how the yield moves both domestically as well as globally. So still way early, but I think given that they have kept the CRB buffer at the higher end, it clearly gives them some comfort going forward in case if income generation is lower than what they have done in the last financial year, they will still have room to provide some surplus transfer to the government. But as Gaurav was pointing out, this provides them buffer both to manage financial stability risks which can emanate in the current uncertain global environment, plus smoothen out and allow for better predictability on government's fiscal consolidation path.
Okay, all right. Coming back to you, Gaura, in terms of liquidity implications, what is the expectation given the RBI surplus transfer?
So in terms of liquidity, it's now the most significant boost after all the OMOs that RBI has done in terms of durable liquidity infusion. But the impact on system liquidity will take some time. It depends on when the government actually spends the money, and then it will enter the banking system. So if you look at the pattern last year, the government of India was able to spend the RBI dividend by June end. Now, but that last year was also an election month, so your expenditure was a bit skewed to the second half. So it may not be the right metric. So we've taken a more smoothened pattern of government expenditure. So let's say over the next couple of months, by August, you could actually see the system liquidity surplus rising to around 5 trillion rupees or 2% of NDTL, which is higher than, let's say, what the RBI governor had given us guidance for transmission. But we still feel that RBI will need to do more OMO purchases, more in the second half of the year, in FY26 second half, because we are also seeing a large pickup. We are seeing, I would not say a large pickup, but we are seeing a pickup in currency leakage. So we do estimate a 1.6 trillion OMO purchase in the second half of the year, more towards the, to the later part of the second half of the year, concentrated more to the second half of the year.
Okay, all right. So, Anubhuti, coming back to you, given that today's figures do go some extent in providing some comfort to the government, and given what the state of the economy is, what are you picking up in the sense, we do expect GDP numbers to be published next week, and well, that's for Q4 of the last fiscal, it is expected that there will be some improvement in these figures. What are you gauging from high frequency indicators currently for the ongoing quarter?
So for the ongoing quarter, we have data, but limited. But at this point in time, I would say that there are some incipient signs of pickup, but not rapid acceleration or a sharp turnaround when it comes to high frequency indicators. In fact, some of the indicators are on the weaker side. For instance, if you look at the core sector data, it turned out to be much weaker than what it was in the month of March. Even if you look at our expectation on IIP, it's expected to be much weaker. Having said that, there are few buffers, and that should help overall momentum to stay supported or improve over the next few quarters. And those factors are, number one, policy has turned counter-cyclical. we are assuming 100 basis points of rate cut in the current cycle, and that on its own should give households, I'm not talking about the economy at large, but just the households, it should give interest rate saving of 0.3% of GDP. Secondly, the tax cut, which the government rolled out in the budget, that would be another 0.3% worth of saving. So that should help inflation, lower inflation should help, plus higher public capex. This year they are budgeting to increase public capex by 10% versus low single digit of last year. So our sense is, even though momentum is not showing sharp turnarounds just as of now, it should stay supported or look better going forward. The big uncertainty is likely to come from the global front. If the global environment once again turns extremely risk averse, then the kind of policy support we have seen might not translate into higher spending because of cautious sentiment both at consumer as well as business level. So that is one uncertainty which we'll have to be extremely cognizant of. But we are forecasting 6.5% of GDP for fiscal year 26, and even this quarter, June quarter, should see a number closer to that.
Okay, all right. And one last question, Gaura, before we leave. So, continuing with what Anubhuti is saying, can we then also expect some improvement in corporate earnings, likely aided by several macro factors working in more favor? We're looking at looser monetary policy. Both of you did talk about lower crude prices as well, and we're talking about lower inflation now, with chances of inflation underperforming even the RBI target. So what's the picture sort of, piecing together looking like for corporates?
So I'll give you a macroeconomist perspective on corporate earnings. So yes, you're right about the fact that inflation pressures are lower. If you look at the WPI index, it's likely to be well below the 1% mark. The way with the crude oil prices falling, with the way you have global commodity prices falling because of the weaker global growth, the weaker China scenario that the markets are pricing in. So that means input cost pressures on corporates will reduce, and we could see some widening of margins. For example, we saw this phenomena in FY24, where even though the sales growth of listed companies was slowing down, but the profit growth was still on the stronger side because input cost had reduced. But obviously, it will not be as substantial as it was in FY24, because FY24 was on the back of the previous year, where we had seen disruptions because of geopolitical risk, and we were coming off from an abnormal time to a normal time. So the delta was larger. So definitely we will see some reduction in input costs, but it will be slightly more moderate. So we could see some pickup in listed company profits, but I would still say it's muted. So for us, our FY26 GDP growth is slightly similar to Anubhuti's. We're at a 6.3. So what we are building in is that you have uncertainty globally because of the tariffs, which is not going to go down anytime soon. Secondly, the domestic front, we have urban consumption, which has stayed weaker because real urban wage growth has slowed down. So this is going to keep private corporate capex tentative. So hence we've taken a very conservative 6.3 real GDP growth estimate for FY26.
All right. Thank you so much, Gaura, as well as Anubhuti, for taking time out to speak to us today. That's on the RBI surplus transfer that's come in at 2.69 lakh crore rupees. And while that is a record high, it is a tad on the lower end of economist expectations. Nevertheless, it continues to provide a considerable fiscal support to the government. So that's that, Himakshi.
Thank you so much for breaking down for us, Pallavi. And with that, viewers, let's slip into a short break, but we'll be right back with Ask Profit on the other side. Stay tuned.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Hello and welcome viewers. You're watching Ask Profit on NDTV Profit and I'm your host Himakshi Bahugna and I will be taking up all your stock related queries on the show. We are joined by Prashant Tapse, Senior VP Research Analyst Mehta Equities on the Fundamentals, and Kunal Kamble, Senior Research Analyst at Bonanza Portfolio on the Technicals. Welcome to the show, gentlemen.
Very good evening to both.
Good evening. Now let's get started with the show. So the first query is written to us from Silchar, Assam. Rubel Biswas holds 2,000 shares of Ease My Trip at 20 rupees a piece. And I think Rubel is a boy. He's asking whether he should be holding his existing position or whether he should sell this counter. He's sitting on a loss of over 17,000 there. So firstly, I'd like to come to you, Prashant. How are the fundamentals of Ease My Trip looking like?
I think if you see last 3-4 quarters, the numbers are very much stable, but there is some kind of deep trouble in the growth factors. I think there is some kind of business changes happening in the Easy My Trip, and even a lot of promoter selling is being seen in last 2-3 quarters. That was the only reason why the stock was under pressure and trading at 11 rupees. But again, I think the downside will continue. Fundamentally, I still not getting so much of comfort level for him to advise to at least average at this point of time. But again, it's a risky call. He's already taken it. I think hold it for 1 or 2 years. So I think first target should be recovering his cost of buying and then look for some profits. For time being, a very difficult position to advise him a right view from current levels.
Understood. And Kunal, what's your sense on the counter on the technical front?
On technical front, it is looking negative. Overall, lower low, lower high formation is there. Again, on the RSI front, it is going down. Looking forward, the ADS, ADX also is going down. So overall, the trend is negative. Doesn't seem a good counter currently. Might see counter going towards 7 level as well. So I would advise not to hold the stock and should take an exit.
Okay, thanks for that view. With that, we have a first caller on the show joining us from Bellary. Hi, Pakshal. Good evening.
Yeah, good evening, ma'am. Hi.
Yeah, please go ahead with the query, Pakshal.
I'm holding Manappuram Finance.
Okay.
300 shares at the price of 177.
Yeah.
Yeah. So, should I book the profit or shall I hold for next 2 to 3 years?
Okay. So, firstly, when you invested in this counter, were you planning to hold this for like 2-3 years?
Yeah, actually, I'm holding from 1.5 years.
Okay.
So
okay.
I can hold for more than 2 years if the stock is good.
Okay, so in 1.5 years, you've made a profit of over 16,000 is what I can see. So Prashant, what would be your advice to Pakshal? Should he be booking his profits or should he stay invested and make more profits in the near future?
So, listening to his call, I think he wanted to be invested for next 2 years. So, obviously, NBFC as a sector, I am very much bullish. The way how government has supported lot of liquidity, support for the sector. I think Amanapuram Finance will do better in next 2 years. But again, obviously, he's making some good profits in the shorter period of time. If he's a trader kind of mindset, I think that advice would be book profit at current levels and look for accumulating at lower levels going forward. But again, if he's thinking like a investor and holding for next 2 years, my advice would be hold.
Thank you for that advice, Prashant. With that, let's go across to another caller. And he's an international caller joining us from Qatar. Hi, Sumit. Good evening.
Good evening, ma'am, and many thanks for taking my call. Usually you are taking my call. Thank you very much, ma'am.
It's a pleasure, Sumit. Please, how can we help you on the show today? Please go ahead.
Actually, I have Dixon Technology 9 shares at the rate of 15,010.
Okay.
And I want to add more.
Okay.
I mean, at what level I add more, and my view is for 3 years, next 3 years.
Understood. So you want to know the correct levels to accumulate more. Am I correct?
Right.
Okay. So for that, Kunal, I'll come to you. So what are the levels that you would suggest to Sumit for him to accumulate more of Dixon Tech?
Okay, so before that, I would just suggest that the overall trend looks negative. So we might see some correction coming towards 14,150 levels. So near 14,150 level, we might see some consolidation, but it might slip more as well. So towards 12,933 will be a level where a good accumulation can be seen. But overall, the trend is negative. It has given a breakdown of a flag and pull pattern. So this is a negative indication. So overall, there is a negativeness in the stock. So downwards, I will suggest to actually exit the stock into this because the stock doesn't seem good on the charts. But if you're looking for a longer term perspective, wait for stock to go near 12,900 levels.
Okay, thanks for that view. And, talking about the fundamentals also, Prashant, so how do you see it compared to its peers in terms of valuation as well? Because, it's currently trading at a very high P ratio. What's your sense?
So considering the valuation, I think that is the only reason why any analyst is not getting comfort levels to have a buy call at these levels. The way we are seeing the growth factors in the business which discount is into, I think the long-term outlooks really looks good. But I agree with Kunal. I think price correction has to come and there should be some kind of valuation justified with the growth what the company is delivering. If you will even see the Q4 earnings were so much not so as expected by the markets. Margins were a little bit under pressure, but volumes, I think there is some kind of pressure still seen. So the recent fall from the recent high would be the reason of the Q4 earnings, which did not support the street estimates. So I think one should wait for more downside from the current levels. Fundamentally, again, valuations are expensive, but the growth factor for next 2-3 years looks very good.
So thanks for that view, Prashant. With that, we have a caller joining us from Bengaluru. Hi, Rohit. Good evening.
Yeah, hi ma'am. Good evening.
Yeah.
I'm looking for a view on Anant Raj Industries. I'm holding 200 shares at 456 rupees.
Okay.
Yeah, I need a fundamental view. I'm looking for a holding period of 6 months to 1 year.
Okay. So Prashant, Anant Raj came out with its Q4 results in which, these are not some good numbers. Net profit is down. These are good numbers. Net profit is up 51.5%. Revenue is also up 22.2%. So these are some healthy numbers that the company has posted. So about the fundamental performance of the company, what do you have to say?
Very positive. We are tracking the stock from last many quarters, and I think the way they are expanding in the real estate as well as in the data center investments, I think the fruits will come in next 1 or 2 years. The investor has to have some kind of patience to hold the stock at current levels. The reason why stock fell down from 800, the 52-week high was the way how the US president has given some kind of remarks with respect to the data centers and all. So I think that was the only reason, and I think 500 would be a very comfortable level for me to add more on the dips. Short term, you will have some kind of consolidation with respect to the business as well as the prices. But I think for 1 or 2 years, I think that the new investment into data center will give a lot of good fruits. So my recommendation would be hold for 1 or 2 years.
Okay, so that's a hold for 1 or 2 years on Anantraj is what Prashant is suggesting. With that, we have a caller joining us from Hyderabad. Hi Anoop, good evening.
Good evening, ma'am.
Yes, how can I help you today on the show?
I bought 17,000 shares of SpiceJet.
Okay.
And at the price of 60 level.
Yeah.
And currently it is trading at 42, 43. Can we see again 70 or 80 levels, because since market it is already in the peak above 80 K.
Okay,
so
okay.
Can we see again? And my view is for the short term.
Okay, okay.
So can we see in the next 2-3 months or by August, or because festive season is going to start? So this.
Understood,
so,
understood.
Can we see?
Yes. So Kunal, he's sitting on a loss of, approximately reaching 3 lakhs rupees. He bought it at 60. Currently, it's trading at 43. So do you see any sort of uptick on the charts in the near term, so that, he can come close to what he actually, bought at, and not be sitting on a significant loss as what he's sitting currently?
So the overall trend, the primary trend, which is the longer term trend, which is completely negative currently. Then talking about the secondary trend, it is also negative. The minor term trend currently, which is into a flat direction. So a range bound momentum is still happening between 52 to 37 levels. So I won't suggest that the stock should be hold, because the overall trend is negative. Overall, the momentum is slipping down. The volumes are drying out. And overall, if we see the directional index, DI minus is trading above DI plus again, and your EDX is trading above DI plus, so that is a negative side. So I will suggest to take an exit from this, book the loss, because the stock might slip below 39 level as well.
Okay, so Prashant, do you also see this negativity around SpiceJet? Are you also holding the same view as Kunal's, and or there is some sort of positive in the company that our investor might look into?
So industry is really doing good. If you see Indigo numbers, they have delivered very strong numbers. But again, SpiceJet being in the same sector is not able to sustain the pressure of the operating margins, as well as the space which is into. There are very much less flights available for SpiceJet, and they are in deep trouble right now. Obviously, in the deep trouble, the businesses, the finances doesn't look good. But shorter period of time, obviously, yes, the continue will pressure. Will continue to continue the pressure. But again, he need to have at least 1 or 2 years kind of view to at least regain his cost of buying. Immediately, I don't see any big trigger on a positive side. But again, 1 or 2 years, there will be big change in the business economics, and then again the cost plus some kind of profits he can gain.
So our investor needs to stay patient with with the counter. With that, we have a caller joining us from Hyderabad. Hi Hari, good evening.
Hello, good evening everyone.
Yes, how can I help you today on the show?
Yeah, sure. So I want to inquire about Punjab National Bank. I want to start accumulating this stock for a long term.
Okay.
So I just want to see.
And what is your time horizon?
Yeah, I think I can hold for 3 to 5 years.
3 to 5 years. All right.
Yeah, is this good time to start accumulating this stock?
Okay, okay. So Prashant, in the PSU banking space, firstly, what's your outlook on PNB? And currently it's trading at 100. So are these the correct levels to enter for somebody who wants to invest in this counter?
With respect to PSU banks, very much bullish from last at least 3 to 4 months. The way how government has again supported the liquidity crunch through lot of credit support and lot of push in the liquidity. I think the PSU banks will do better from next 1 or 2 quarters. With respect to valuations, very much decent at the current levels. He is looking to buy for long term. I think every dip has to be bought. Bottom, I think it would like 90, 95 can be a good range for him to start accumulating more. But even with a very staggered manner, I think he should start buying on the dips. Overall valuation looks very much decent, and I think the stock can do really good with a target of at least 1 year from the current levels. 125, 130 can be a target from current levels.
Okay, thank you so much for that. With that, let's go across to a caller joining us from Hyderabad. Hi, Ramchandra. Good evening.
Good evening, ma'am.
Yes, please go ahead with your query.
Regarding Ramki infrastructure.
Yeah.
I am holding 8,000 shares at the rate of 491 rupees.
Okay.
May I know the company performance and technicals of this, please?
You want a technical outlook on the counter?
Technicals.
Okay. And when did you buy these shares?
April, in the month of April.
So in the month of April, you bought, and in just like a month or so, you have made significant profit of 1.66 lakhs. So, congratulations to you, Mr. Ramchandra.
Thank you.
And Kunal, coming to you, what are the charts suggesting, and is it a good news for Ramki Infra on the charts?
Okay, so recently is given a breakout of triple bottom pattern, so it is a reversal pattern. So breakout has been seen, a good volume has seen towards the breakout level. Now a small retracement can be seen towards around 487 levels. So a retracement will be there, so not to get panic. If it closed below 487 levels, then you should take an exit. Till the time it is holding above that, momentum can be continued toward 500 to 600 levels. 624 will be the target.
Okay, 624 to be the target is what Kunal is suggesting. With that, we have a caller joining us from Mumbai. Hi, Piyush. Good evening.
Hi, good evening.
Yes, how can I help you today?
Yes, good evening. See, I'm holding 1,000 shares of IREDA, Indian Renewable Energy Development Agency.
Yes.
I bought it about a price of 48 average price. I got some in IPO and then I bought it.
Okay.
So the price is 170. What is the view? I'm looking for a medium term and long term outlook.
Okay.
Should I hold or sell?
Okay, understood.
Thank you.
Prashant, directing this question to you, how are the fundamentals of IREDA looking like? Are you positive?
Yes, very positive. If you see last 2-3 quarters, the stock has really outperformed with respect to the market returns again. But again, the momentum in the price action would be very much slow because of the PSU, and again, the business which is into it is a long gestation period of business financing into renewable energy. So I think my advice would be hold on this counter for at least 12 months from the current levels. My first target would be 200, 220. Then again, you can revisit the channel and think of booking profits at those levels.
Understood. Thanks for that view, Prashant. With that, we have a caller joining us from Chandigarh. Hi, Surjeet. Good evening.
Good evening, ma'am.
Yes.
I want a query about Jyoti CNC. I'm having around 10 shares of Jyoti CNC, which I bought at 850 rupees in a month back.
Okay.
So should I add more or book the profit and exit?
Okay. So are you are looking for a technical view, right?
Yeah, technical as well as the long term. So,
Okay. So, Prashant, firstly, I'd like to take your fundamental view on Jyoti CNC. Do you have any coverage on the counter?
We don't have any coverage, but I am tracking the stock, quarter on quarter. But the fundamentals are very much strong with respect to ratios, with respect to all the, price booker valuation, P ratios. I think very much comfortable to advise him as a hold recommendation on the current levels. The company is almost like a market leader, holding 10% market share in the CNC machines and very professionally run. So I think though the valuations of P is more than 90 times, I think even though the comfort levels because of the high growth sector, my recommendation would be on the hold side with a target of at least 1400 from the current levels.
Okay, and Kunal, on the technical front, I can see an upward trend on the charts. So what is your sense on the counter?
Okay, so overall it is making a higher high, higher low formation. That is a bullish signal. Again, it is trading in a good range. Okay. Taken support of 21 EMA. So from a past overly 2 to 3 months, it has been trading about 21 EMA and a good support is placed at that. So taking a support of 1217, you can hold for an upward momentum towards 14,400 levels. Again, the second level will be near 1476 level.
Okay, thank you for that view. With that, we have a caller joining us from Hyderabad. Hi, Ravi. Good evening.
Yeah, very good evening.
Yes, how can I help you?
Yeah, I have a query on Paradeep Phosphate.
Okay.
So, is it a good time to buy? I mean, at what level is it good to buy? And I can hold for 1 to 2 years.
Okay, so a long-term view on Paradeep Phosphates. Prashant, I'd come to you. Currently, it's trading at 157. Firstly, is it rightly valued as compared to its peers? And what is your outlook on, this company?
Overall, with respect to long term, very positive. Short term, there may be some kind of consolidation in the business because again, I am seeing the quarter on quarter numbers are very much stable, and this quarter has really been the surprise for the overall sector. I think from the 8% EBITDA, it has gone to 10%, a good jump in the EBITDA margins. But again, I think level, I think Kunal can help him to get a right price. But again, valuation wise, very much comfortable to go for long-term investment in the current levels.
Okay, thanks for that view. With that, we have a caller joining us from West Bengal. Hi, Arun. Good evening.
Good evening.
Yes, please go ahead with the query.
Yeah, actually, I'm holding about 20,000 shares of Eternal.
Okay.
And my average cost is 248 per share.
Okay.
So I want to know whether I should accumulate more shares of the company during dips to bring down the average cost of share to about 230. Please suggest what is a short-term and long-term view of the company.
Okay. So firstly, I'd like to come to you, Kunal. He bought it at 248. Currently, it's trading at 238. Although the stock was up in trade today over 3%. But what's your sense on this counter, and what would your recommendation be to Arun?
Okay, so I will suggest that to hold a stock, the stock is well placed above its all moving average. Again, the stock is trading in a tight range currently. A breakout about 250 will make a good move towards 300 levels. But currently, the potential is there. The buyers are there. The volume is great. Then looking at the moving averages are trending upward. The short-term moving average is trending upward. Then the RSI is in the upper range. So overall, the trend looks positive. Hold the stock till the time it is trading above 220 level. It is good for an upward momentum toward 300, which can be followed by 350 as well.
And, talking about the space in particular, Prashant, firstly, how well is this particular counter positioned? Are you positive for long term?
Yes, very much. We all know the company by the name of Zomato. It's in the fastest growing sector right now, almost 30 to 35% of month on growth coming in the delivery businesses. I think being a leader in the business, I think the loss will have a pressure in the books. Valuation will be trading on an expensive way unless they come out with a very net profit levels, very profitable. But again, because of the high competition, the quarter-on-quarter numbers may be very much volatile for understanding long-term outlook on the stock. But again, I think being a leader in the sector and fastest growing segment, I think I will recommend him to hold the stock for long term. Target would be anywhere between again 300, 350, which is as good as Kunal's target.
Absolutely, because there's always been a tussle between Eternal, that is like Zomato, earlier known as Zomato, and Swiggy. People are always confused between the two as to which one to take, which one not to take. So keeping that in mind, what would your pick be, Prashant?
So my advice will be very much neutral. I will have both stocks in the portfolio, because we don't know which horse will run faster, but both will run, that is for sure.
Okay, thanks for that. With that, we have a WhatsApp query. So E. Venkatraman holds 265 shares of Andhra paper at an average price of 95.93 per share. And he has accumulated the shares over 10 months, he has written to us. And what should he be doing now? And he said that he can wait for another 1 year. So Prashant, talking about Andhra paper's fundamental performance, are you positive on the company?
Recently, we had some study on the paper business and the sector. I think there is a cycle change in the sector of paper, so that would bring some kind of positivity in the overall all the companies like JK Paper, West Coast Paper, or even the other papers. I think that would drive the business. I think the coming quarters would be better than the current quarter, which is Q4. So I think with that consideration, 1 or 2 quarters from the current levels, at least the cost of his investment may come into very much shorter period of time. So my recommendation would be hold. The reason would be change in the cycle in the paper industries, but not because of the performance of the Andhra paper. With respect to valuations, very much decently valued of 15p, because again the ratios are very much muted to single digit, like 6 to 7% of ROC and 5% of ROE. Not so good to looking. But again, cycle change in the industry may bring some kind of good business in the coming quarters that will bring his target towards 90.
Okay, thanks for that view. And Kunal, talking about the technical aspect of it, so what are the key resistance and support levels that you can see on the charts?
Okay. So nearby resistance is placed around 80. So the stock need to trade above 80. Then we can see an upward momentum towards 87 levels. But currently looking at the stock, the trend is all sideways. So wait for a breakout. If it breaks above 80, accumulation can be done in the stock. So the averaging can be down and momentum towards 87 can be followed.
Okay, thanks for that view. With that, we have a caller joining us from Bengaluru. Hi, Rajesh. Good evening.
Hi, good evening.
Yes, how can I help you?
Yeah, I'm looking for expert advice for BSE stock.
Okay.
I'm having 84 shares.
Okay.
At 4100, and I'm looking for more accumulation in the long-term perspective.
Okay. Okay. Yeah. So currently he is sitting on a loss of 1.39 lakh, Prashant. He bought it at 4100 and currently it's trading at 2448. So what's your sense on BSE, and what advice you have for Rajesh? Should he be accumulating more at these levels?
First, there should be a correction in the price. I think today there was a X of bonus, so I think the price of the loss may not be 1 lakh plus for him. So he will be in the profit even after adjusting the bonus X getting today. But overall, my outlook on the BSE would be very much strong, and I think the way they are getting market share larger in the future segment, and NSE is losing that. But again, obviously, the outlook would be very much for long term. Short term, there may be some kind of pressure. There are even news saying that NSE may be getting the expiry date shifted from Thursday to Tuesday. So that will have some kind of very much volume shifting from BSE to NSE again back to their NSE future model. So I think that will bring a lot of short term volatility, but need not to worry. I think the overall target would remain 3000 plus post the bonus adjustment for more than 12 months from the current levels. My advice would be hold from the current levels, but again look at the corporate adjustment which has happened today.
Okay, okay. Thanks for that view. And with that, we have a caller joining us from Kurnool. Hi, Mansingh. Good evening.
Very good evening, madam.
Yes. Please go ahead with your query.
My query is regarding AGI Green Pack, madam. Is it the right time to enter?
Okay.
How is the fundamentals, madam?
Yeah, understood. So you are a long-term investor, right, Mansingh?
Yes, madam.
Okay, okay. So Prashant, a lot of fundamental queries on the show today. What's your outlook on AGI Green Pack for somebody who wants to invest in this counter? Is it advisable to enter at these levels?
Yeah, before entering, one should understand the business again. So they are into manufacturing of container glass, PET glass, bottle glasses, and even security caps. So very much different in the business model. Again, with respect to valuations, very much comfortable to have a buy on dip strategy from the current levels. With the ROC of 20, with the ROE of 16, very decently valued. The business is going very decent growth of 15-20% every year. So market cap of around 5,500 crores. From the current levels, the target near term would be 1,000 rupees. But again, I would advise him more to add more on the dips. Dips can be anywhere between 800 to 820. That can be a good level to start adding more.
Okay, so dips could be between 800 to 820 is what Prashant is suggesting. And also coming to you, Kunal, on the technical front, I can see that the stock is in its upward trend. So what do you make of the charts?
Okay, so the stock has moved in a V-shaped recovery, but overall the volumes are not there. So the volumes are drying up. So the buying interest, what we see is not there. So limited people are buying at current level. So as Prashant said, wait for the stock to go under a dip. A dip towards 800 can be expected towards its 100-day moving average. So a dip near 800 will be a buying opportunity. At current level, I won't suggest any buying entries.
Okay, thanks for that view. With that, we have a caller joining us from Salem, Raj Shekharan. Hi, Raj Shekharan. Good evening.
Yeah, good evening, madam. I have bought Cochin Shipyard for 2,150.
Okay.
100 units.
Okay.
It's around 23,500 loss. Should I hold or sell or add more?
Okay, and when did you purchase these shares? Raj Shekharan, are you there on the phone line? When did you buy?
4 days, ma'am. 4 days. 4 days before, ma'am.
Okay, 4 days before you've bought it, and you've made a loss of almost 23,000. So are you a short-term investor?
ma'am. I'm a short-term investor.
Okay, okay. So hence you are a bit jittery about this stock. Kunal, what advice do you have for Raj Shekharan, who holds 100 shares of Cochin Shipyard and is currently sitting on a loss?
Okay, so directly jumping on the stock, I would just like to talk about the defense sector itself. So defense sector has moved and there is still fuel remaining in the defense sector. Talking about Cochin Shipyard is one of the stock which has been underperforming and currently it has given a breakout of a rounding top bottom. So a retrace, a throwback towards its neckline has also been seen. Again, buying has been seen. So not to worry, the stock will go up towards 2,500 levels. Till the time it is holding about 1640 levels. So I will suggest this client to hold the stock. There is good upward momentum ahead towards 2700 level as well.
Okay, thanks for that view. So have patience there, Mr. Raj Shekharan, with the counter. And we have a WhatsApp query. Avi holds 1,000 shares of Northern Arc Capital at 173 a piece. And he's sitting on a profit of over 45,000. He's looking for a 1 to 2 year outlook on the counter. And you know, Northern Arc came out with its Q4 results in which the net profit was down 57.5%, and you know, EBITDA was also down over 25%. So these are not some good numbers there. Prashant, what do you have to say firstly about the numbers, but also the fundamental aspect of it in totality? How do you view Northern Arc Capital?
Post listing recently from last 8 months, I think the stock has not done well. Even the numbers were not so good from last 2-3 quarters. So that was the one reason why the stock underperformed post listing. Now, what should we do? That's the biggest question. Again, I think the stock will be consolidating in the current levels only, because unless we don't see any good earnings show from the company, there will not be a good trigger in the price to move towards higher levels. So for me, again, valuations looks very cheap, because again, cheap is not always best. So I think with respect to the growth numbers, with respect to ratios and all, I think not comfortable to advise any client to buy at these levels. But again, buy and dip should be a strategy again as the investor want to hold it for next 2 years. So add more below 200 for 2-year view. Currently, I think hold is the only strategy.
Okay, so hold is the only strategy is what Prashant is saying. With that, we have another WhatsApp query. So Aman holds, he wants to ask about CG Power, and he's asking whether he can enter at current levels for 1 to 3 years. And he wants to hold around 100 to 200 quantity. And so currently it's trading at 696, and in the power space, Prashant, you know, power space is doing pretty well. So firstly, what's your outlook on CG Power and the space in particular, if you have any picks there?
Let me talk on this space. Very much comfortable to have a positive view on the long-term outlook on the power space. This company is into power systems as well as into industrial systems, which will indirectly have some kind of energy efficiency products. So overall, the growth is very much strong in the industry, and the company is also doing really well. If you see last 10 years, the company has delivered a great return to any investors. But time being, again, if you see the recent run-up would also have been because of the numbers with respect to demands in the business. But again, with respect to valuations, fresh buying, I will not advise at current levels, because valuations are very much on the top, like 100 plus PE and 25 plus price to book valuations. But again, any dip should be a good opportunity to buy this stock for long term. But right now, wait and watch for a good level, which would be around 650 current level.
Absolutely. And Kunal, on talking about the levels to enter, I would like to take your help, you know, on that front. What are the charts suggesting?
Okay, so the stock has given a breakout of a descending triangle pattern, but there is no volume seen in the stock. So we might see some fake breakout coming into the stock. So a downward momentum can be expected towards 630 levels. So if the stock breaks below 630, again, a downward momentum toward 580 can be seen. Looking at the momentum from RSI is near its overbought zone. So I will suggest not to enter at current level, wait for some dips towards 630. If the stock takes support at 630, then again a buying opportunity can be seen, and that momentum can be carried over to 750 levels.
All right, thanks for that. And with that, I'm afraid that we are running short of time on the show today. But thank you so much, Prashant and Kunal, for being there patiently, you know, asking, solving our viewers' query so patiently. Thank you so much for being on the show. And with that, viewers, it's a wrap on this edition of Ask Profit. Up next, my colleague Sanjana is here with Profit 360, bringing you sharp insights on markets, national and international news. Sanjana, over to you. What do you have today for our viewers?
Thanks, Himakshi. We have an action-packed show up ahead on Profit 360. We're going to be looking at the Trump-Apple threat, the latest tariff threat, very, very closely. We have a great panelist. After that, we're also going to be looking at Trump and Harvard. There is a massive war raging there between the university and the US administration. And then, of course, we're going to go deeper into the RBI dividend. So stay with us. It's going to be an action-packed bulletin. And I'm going to see you on the other side of this very short break.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready.
The Reserve Bank of India is set to pay a record 2.69 lakh crore as dividend to the central government. While it marks the highest payout ever, it still comes in slightly below expectations. Eternal and HDFC Life Insurance are the top gainers in Nifty all sectoral indices and higher except Nifty Pharma today. US President Donald Trump turns up the heat on Apple, threatening a 25% tariff if the tech giant doesn't move iPhone production to the US. Trump says he's made his expectations clear to CEO Tim Cook. The development sends Apple shares sliding down nearly 4%. Meanwhile, sources tell NDTV Profit that India will take up funding to Pakistan in June 2025 with the World Bank and will also urge FATF to put Pakistan back in the grey list. Sources say India could offer opening up public procurement to private US bidders as part of trade talks. Markets will be opened up in a phased reciprocal manner, meaning Indian firms could also get access to US public procurement market. Trump and Harvard University in the middle of a raging war, with the university now filing a lawsuit against the administration, arguing that the decision to block foreign student enrollment is unconstitutional retaliation for opposing White House policies. The Adani Group announces a significant additional investment of 50,000 crore across the Northeast over the next 10 years, spanning across many sectors, including green energy, roads and highways, and digital infrastructure. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. It's our top focus this evening. In an escalating tiff between US President Donald Trump and Apple CEO Tim Cook, Trump has threatened to slap 25% tariffs on iPhones that are sold but not manufactured in the US. As a result, Apple stocks too have seen a beating in the US markets. But it's not the first warning of its kind though. Just a few days ago, Trump had again asked